This is Alan Bush with ADMIS. In the stock index futures, seeing very strong gains today. Looks like much of this is linked to better European equity markets. We did have some merger and acquisition news there in the Eurozone, so that helped stock index futures there, which then helped our futures here to advance. Also, we did have factory orders coming in stronger than expected by a slight margin, up 3%. The guess was up 2.9%. So good gains today. However, we are entering a period of seasonal weakness for stock index futures, and we'll see how that plays out, especially with the Fed coming in every month buying $85 billion in treasuries and mortgage-backed securities. Over in the currencies, seeing the euro currency under some pressure. We have news now that the unemployment rate in the Eurozone has increased to a record at 12%. Also, we're seeing some pressure in the British pound, some weaker than expected economic data in the UK, taking the pound sharply lower. Also, the yen under some mild weakness now. There seems to be a growing feeling that the Bank of Japan will announce more accommodation after their policy meeting, which takes place tomorrow and Thursday. From an interest rate differential point of view, we continue to believe that the dollar index will advance and the yen and the pound will come under downside pressure. And credit markets lowered today for a variety of reasons. For one thing, stock index futures higher. That's a bearish influence on the treasuries. Also, we had the factory orders report, as we mentioned, coming in stronger than expected. That also a bearish influence. Longer term, nothing has changed. Still believe that the main trend is lower for the credit futures market, especially at the long end of the curve. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.
Apple Sub-Zero.